So in this video, we're going to talk about Live Nation. And before we look at the charts, we're going to discuss their earnings. So they reported earnings on Wednesday, and they blew past analyst revenue projections for the quarter as it sold more fee-bearing tickets than expected. However, its operating margin missed, and its EPS fell short of Wall Street estimates. Nevertheless, stock still gapped higher and closed the day roughly up about 5%. Now, as I like to do on every video, perform a multi time frame analysis. I typically begin with the monthly chart. And what we can see is this is the pandemic lows. And as you can see, like many companies, they got hit in 2020. But as the economy opened back up, price has nicely gone up. This was January 2022 is when Powell started raising rates. And so like many companies, Live Nation no different. We had a pullback as consumers became cash strapped and discretionary spending decreased. All right, so taking it down to the weekly chart. And I do want to bring to your attention, I love trend lines. Typically, trend lines signify a reversal in price. So you could also look at this and say you have a W pattern, double bottom. Let's mark that. And here's that W pattern. But I want to bring to your attention this weekly bias level at $77.50 and how that was formed. You had a rally in price, one basing candle, and then the rally out. Not on huge volume, but above average volume. And as you can see, price tried to come back to the zone, but didn't. However, when price came back in October of last year, price filled the remaining unfilled buy orders, and price moved higher. Now, one thing I want to note, the trend is still up. If we just categorize it, higher high, higher low, higher high, higher low, higher high, and you have not broken that higher low yet. Let's put that in a different color. So again, that's why the trend is still up. Now, if you get a candle close below, say $86, that would invalidate the uptrend, and then you would technically be in a sideways market. Now, if price was to continue to move down and revisit this zone, well, then one has to be careful, because back here price penetrated the zone almost 100%. So this zone is pretty much used up, which means that if price continued to decline, there's really nothing stopping price from slicing this zone like a hot knife slices butter. And if that was the case, then this extended range green candle, there's nothing in here preventing price from revisiting the recent lows. All right, so let's go down to the daily chart. Now price is at a level where pretty much the balance between buyers and sellers are evenly distributed, and so there's really nothing to do currently with price. You did have price close below the 200-day moving average. Typically when you're below it, you're in a secular bear market, and above it are in a secular bull market. However, short term, as you can see, the momentum is down because your momentum moving averages, this is the 13 and the 26 are pointing down. So right now there's nothing to do. Strolling back out to the weekly chart, you're kind of in the middle of this range. Okay, here's something I just spotted. That is weekly sellers. You had this drop in price, one basic candle drop out on high volume. So this makes sense. You're in a sideways price action, and typically you want to play the extremes. How do you play the extremes? You typically just sell at sellers zones and you buy at buyer zones. So again, nothing to do in this case. Thanks for watching. Subscribe. Please like the video.